Bitcoin is entering the perfect setup. You gotta see this. As of this morning, just announced another Bitcoin ETF to start trading this week. Australia approved a Bitcoin ETF by VanEck. It starts trading on Thursday. So adding to the list, that makes over 36 ETFs in total, with the total assets under management of the US ETFs now up to over $58.2 billion in Bitcoin, and then the total global ETFs over $69 billion, and now even just BlackRock and Fidelity now own a combined 477,000 Bitcoin, showing when Bitcoin dips, the institutions are aggressively accumulating, and while price is still ranging in this accumulation zone. And although we're recovering today, last week, price virtually just went down, and subscribers of Altcoin Daily understand why. Bitcoin ETFs cool last week as crypto funds post biggest losses since March. Now specifically, the Bitcoin ETFs shed $621 million worth of assets last week, and why that's a big deal is because that follows 2 weeks ago in which the funds gained nearly $2 billion. So 3 steps forward, 1 step back. And that 1 step back was because the Federal Reserve now anticipates only 1 rate cut in 2024, not 3, as was forecast at the start of the year.
Like Bitcoin's is going to have trouble going higher if there's only 1 cut.
Does Bitcoin need multiple interest rate cuts to really take off?
It's been wanting, obviously that's why people buy it, because they think the Fed's going to go hog wild again. But why is it diverging from the NASDAQ?
Well, number one, and this is what the mainstream media won't share with you, it took gold ETFs 4 years to cross $15 billion in net inflows. Bitcoin did it in just 5 months, meaning there is more demand. And 2, breaking news, the largest European telecom, Deutsche Telekom, will start mining Bitcoin. This has just been announced. And on top of that, the Chinese telecom giant Coolpad to invest $13.5 million in Bitcoin mining rigs to be deployed in North America. So global fundamental adoption for Bitcoin is pretty clear. A perfect setup may be upon us. But breaking news, have you heard what just happened with the SEC? The SEC's Chief of Crypto Asset Enforcement Division, David Hirsch, has left his role. So this was the man at the SEC in charge of enforcement during the FTX collapse. He took down FTX, or he was in charge of that. Celsius happened under his watch, and a bunch of celebrity meme coins. And he's now done. In fact, here was his direct statement on LinkedIn this morning. This past Friday was my last day with the SEC after almost 9 years. During that time, I had the opportunity to work on more complex, challenging investigations and issues than I ever imagined when I joined the agency as a staff attorney way back in the day. I'm particularly proud of the historic work done by the crypto asset and cyber unit team I had the privilege to lead. Of course, it wasn't just him. He goes on to say, as I often say, securities enforcement is a team sport, and that was certainly true throughout my tenure. Every success I was a part of was the direct result of collaboration and combined efforts towards a common goal. I am very excited over the next set of challenges. It'll be very telling on who the SEC appoints to this position next. I will keep you updated. And in totally unrelated news, Waka Flaka Flame token launch faces insider trading allegations. So this is a hip-hop artist from back in the day. He launched a token called Flaka, and around 40% of the coin's total supply was scooped up before Waka Flaka Flame announced the launch. I will keep you updated on this, but again, breaking news as of today, Tether, the world's largest stablecoin, launches a new stablecoin backed by gold.
Introducing Alloy by Tether, the first tethered asset.
So this is a dollar-pegged stablecoin backed by gold. On Monday, Alloy debuted on the Ethereum network, allowing users to create tokens collateralized by Tether's tokenized gold, XAUT. So backed by gold and over-collateralized.
But what is a tethered asset? It's a new type of digital asset that aims to follow a price of another asset closely using different strategies, including over-collateralization and secondary market liquidity pools. AUSDT is the first alloy by Tether product that aims to track the value of the US dollar using Tether gold as collateral. Let's redefine the concept of stability together.
To me, these financial products are just new ways of the old system to get yield off of this, and we'll build stuff, different financial products that are a little less stable like this. We will see. We also have a major milestone for Limewire Altcoin, which is an AI crypto studio for artists. 30,000 followers on CoinMarketCap reached. So pretty cool to see the growth. And even bigger announcement, we're happy to announce that Limewire will be part of On-Chain Summer on the Base blockchain. Stay tuned for more details over the coming weeks. So Limewire on ETH L2, backed by Coinbase, Base. And very quickly for AIT Protocol, AIT roadmap unveiled, paving the future of AI. The team is excited to reveal our updated roadmap. A lot has been put into what's coming next for AIT. And what's happening today, now, obviously the subnet on BitTensor is live. The Einstein subnet 35 is running smoothly. We are expecting to pull more weights over the coming weeks. So slowly, yet surely. And looking at the roadmap on what comes next, specifically for next month. BitTensor subnet revenue sharing. To me, this has already started. I'm staking my AIT, and I'm getting some Tau BitTensor token as a reward for doing it, since they have a subnet. And begin IDO, initial DEX offering, for the meme token on the Ton blockchain, which to me is pretty interesting, not because of the IDO, there's a million of those, but because they're working with Ton, another big emerging ecosystem. Of course, many other months to look at into next year for the AIT roadmap. But it's not just altcoins. It's not just Bitcoin. Ethereum, ETH on sexes, is at the lowest level since 2016. Nobody has yet fully grasped how bullish this is in combination with the ETF launch happening in July. So does all this add up for the perfect setup? Bitcoin at $65,000 in 2024 has been completely de-risked. It's the average price of Bitcoin in ETF capital, meaning that's what the institutions buying into the ETFs, the price they're comfortable investing at. It's the same price it traded at 3 years earlier, only we're in a much better place, fundamentally. And presidential candidates are fighting to show they're the most pro-Bitcoin. This is the perfect setup.
Bitcoin's is going to have trouble going higher if there's only one cut.
And maybe some people are saying, well, the Federal Reserve was going to cut rates 3 times this year. Now it's just 1. Maybe risk assets aren't as bullish as we thought they were. And I would remind you, the Federal Reserve is not proactive. They're reactive.
The Fed, with respect to rates, is reactive, right? They're not proactive. So they react to the economy, both positive and negatively. So when the economy's ripping and inflation's starting to turn up and growth is high, they'll start to rein back in the liquidity. They'll raise rates and try to slow down the car so it doesn't careen off the edge. So the same thing is true on cutting, is they'll wait too long. The economy will have already slowed. I mean, there are a lot of indicators that say things have slowed. I mean, Japan's in technical recession, Europe's in technical recession.
All I'm saying is rate cuts are not a perfect indicator. I think Bitcoin could go much higher before the rate cuts, just like we saw back in 2017. They were raising rates as Bitcoin was going up. The minute they cut, actually the economy was already in a bad place and Bitcoin had already crashed before that. Meaning the Fed is not our savior. As these stories develop, I will keep you updated. Click subscribe. You do not want to miss a daily video. And use code Altcoin Daily for 10% off your tickets to Bitcoin Nashville in July. My brother and I, Michael Saylor, many awesome speakers. See you there. Use code Altcoin Daily. Link down below.